The semiconductor industry has been on fire in 2024, with groundbreaking advancements and robust financial performances driving significant gains across the sector. As AI and data processing needs skyrocket, semiconductors are at the heart of technological innovation. Today we'll be discussing the best semiconductor stocks to buy immediately. Let's explore why these companies are must-haves for your portfolio.
Yeah, there's a tension there, certainly, between the demand for AI and then the politics that continues, of course, to evolve, and more negatively, as you've said. And we'll get into the details of that and the implications for this company longer term. But the near term, the most recent quarter, you've seen a 36% increase in profits for TSMC, which, of course, churns out those AI chips, the GPUs for the likes of nvidia and Apple, of course. It's looking at margins, Danny, of 53%. The CEO saying, when our clients and customers do well, we do well. And that is certainly articulated and underscored by that target around margins. They're also narrowing their focus in terms of CapEx. Really important for analysts because that talks to the demand that they see going forward. They've actually raised it to the higher end of their range, their previous range, to between 30 and 32 billion US dollars. This is a company that sees continued demand then for those AI chips. They continue to build out to try and meet that demand. The CEO saying that the gap in terms of supply versus demand is still wide and takes them into 2025. The other side of this for TSMC is that the smartphone market is also starting to turn around. So on the two sides, the AI chips and then smartphones that had been in a slump, that is starting to come through for them. And they are continuing to build around the demand needed for AI. Really interesting, for the first time in their earnings, the demand for AI, revenues from AI, I should say, came in above 50%, making up the majority of their revenues, more than half of their revenues for the first time for TSMC. But you're absolutely right, the political headwinds are also there.
The first one we have is nvidia. Has had a remarkable run in 2024, with its stock surging about 140% year to date, trading around $112.48 as of late July. This surge is fueled by the booming demand for AI technologies and NVIDIA's dominant position in the AI hardware market. Over the last few months, NVIDIA's stock price has been volatile, hitting a record high of approximately $135.58 before leveling off. Analysts remain bullish, with a strong buy consensus rating and an average price target of $140.70. However, some analysts caution that NVIDIA's current valuation may be bubble-like, given its high PE ratio of 65.71, far exceeding industry averages. NVIDIA's innovations, such as the new GeForce RTX 40 Super Series and a generative AI service in collaboration with iStock, reinforce its market leadership and future growth potential. Taiwan Semiconductor Manufacturing Company, TSMC. Taiwan Semiconductor Manufacturing Company, TSMC, is another stellar performer, with its stock up 54% year-to-date, recently trading around $160. TSMC benefits from the AI boom, manufacturing chips for NVIDIA and other tech giants. Despite geopolitical tensions between Taiwan and China posing a risk, TSMC's financials remain strong, with net sales increasing by 12.62% in the recent quarter. Analysts see TSMC as a solid long-term investment, with a strong buy consensus rating and an average price target of $184.30. TSMC's pioneering 3D IC technology and advanced process nodes, such as 3nm and 2nm, ensure its continued dominance in semiconductor manufacturing. Advanced Micro Devices AMD has been a standout in the stock market, with its shares surging despite broader market challenges. Over the past year, AMD's stock price has seen a notable increase. Specifically, it rose from about $108 in May 2023 to a high of $211.38 in March 2024. Despite some setbacks, AMD's strong growth is driven by the soaring demand for data center and AI products. Analysts are optimistic about AMD's future, projecting a potential upside of over 44% in the next year. Analysts from Susquehanna, Cantor Fitzgerald, TD Cowen, and Citigroup maintain positive ratings on AMD, with price targets ranging from $170 to $210. AMD's new Zen 5 Ryzen 9000 processors offer significant performance gains and improved power efficiency, reinforcing its competitive position. Strategic acquisitions, such as Silo AI, enhance AMD's capabilities in AI, positioning it well against industry leaders like NVIDIA. ARM Holdings has experienced an extraordinary surge, with its stock soaring 141% in 2024 alone. The company's market capitalization has more than tripled since its IPO in September 2023, now standing at over $182 billion, with shares trading at approximately $149 as of late July. ARM's stock performance in the first half of 2024 was remarkable, driven by the growing demand for AI and its strategic positioning in the CPU architecture market. The innovative ARM v9 architecture, widely adopted in smartphones, data centers, and PCs, has been a significant driver of ARM's robust financial performance. Analysts hold a positive outlook, with a consensus rating of buy and a potential upside of 27.4% from its current price. Notably, Lee Simpson from Morgan Stanley upgraded his rating from hold to buy, raising the price target from $107 to $190, while John DeFucci from Guggenheim maintains a strong buy rating with a price target of $169. These evaluations underscore the optimistic perspectives of top analysts on ARM Holdings' growth potential. ASML Holding has experienced remarkable stock performance over the past few months, with its price rising by approximately 85% year-to-date, recently trading around mid-$850. This upward trajectory, however, has been marked by volatility, with the stock hitting a peak of around $1,000 before leveling off. Analysts remain bullish on ASML's prospects, maintaining a strong buy consensus rating and setting an average price target of $1,200. Though some express caution due to the company's high price-to-earnings (PE) ratio of 46.50. Analysts are particularly excited about ASML's ongoing innovations, such as the development of high-NA EUV lithography, which promises to further enhance chip-making capabilities and drive future growth. This technological advancement is expected to solidify ASML's leadership in the semiconductor industry and positively impact its stock performance in the coming years.
The whole problem with the market at this point, or what we've seen in the past week, is that we don't know what that next watermark is because that growth story may be in jeopardy. If you don't believe it's in jeopardy, then that's one thing. But there are plenty of people who are worried about that.
Well, they're worried about it in the short term. Again, I think it's very hard. I mean, again, the only name that I can really point to with concrete numbers in terms of how they are actually monetizing AI is NVIDIA. What you have seen is them raise up to some $24-25 billion and continue to raise those guidance. And what I'm saying is I am a believer that over the long term, that tends to translate into these other names. In the short term, to say that you're expecting some immediate ROI on however many $1 billion of spend that we've had over the past 2 years in CapEx seems to be, just a little bit myopic in view.
Right.
In conclusion, the semiconductor industry is at the forefront of the technological revolution, with NVIDIA, TSMC, AMD, ARM Holdings, and ASML leading the charge. These companies are not just keeping pace with current demands, but are actively shaping the future of technology with their innovative solutions. Investing in these stocks provides an opportunity to capitalize on the booming AI and data processing markets, offering substantial growth potential. By adding these semiconductor giants to your portfolio, you are positioning yourself to benefit from their continued success and the ever-growing need for advanced technology in our digital world. Thanks for tuning in. If you found this analysis helpful, please like, comment, and subscribe for more stock market insights.